Alright, guys, so let's talk about the economic war. While we all focus on the Middle East, something nasty is brewing in Europe. Remember all the talk about de-dollarization? Well, this is going to accelerate. The next move by the EU is about to destroy the Western financial system even further. Now, the EU, they have decided they are going to confiscate the frozen Russian assets for Ukraine. And we're about to witness the opening of yet another Pandora's box, but this time it's going to be bigger, it's going to be nastier. In our lead story today, the EU is working on a proposal for frozen Russian assets. This is a shocking move that is crossing the economic red line. Von der Leyen is moving to pool the profits from Russia's frozen reserves to help Ukraine and their post-war reconstruction. And it's not a small amount being mobilized. They'll be utilizing over $220 billion of frozen capital to generate profits for Ukraine. Now, the EU, they've obtained support from Janet Yellen and the UK as well. So, this is more or less a coordinated effort, a coordinated windfall tax on the Russian reserves. And they're expected to generate around 3 billion euros a year to help fund and rebuild Ukraine. Understand why this is suddenly happening. The West now has to fund two wars, right? One in Europe and the other in the Middle East. A ton of money has been thrown into a black hole and they won't stop. They can't stop because of the sunk cost fallacy. By using the frozen reserves, they could generate income every single year to keep fighting perpetually. According to von der Leyen, an actual proposal is coming, and the windfall profits are just the initial step. They could utilize the Russian reserves even more. For example, the EU could take the 220 billion and throw it into the German 2-year bond that yields 3%, and that would generate $6.6 billion worth of revenue every single year for Ukraine. It's more than double the initial windfall tax plan. And this was a scheme initially drawn up by the EU, and it's probably their end goal to ramp up spending to fight Russia. Now that the Middle East has erupted, I don't think Brussels has much of a choice. Ukraine is about to lose its biggest funder in the conflict, which is the United States. The new Speaker of the House, Mike Johnson, is moving to separate the funding of Ukraine from Israel. He's fast forwarding the aid to Israel but not the money to Ukraine. And at the end of the day, American interest lies more in the Middle East than in Eastern Europe. And that's why we are seeing this sudden scramble by Europe to raise funding for Zelensky. They obviously can't outspend the US, so the next best option is to use the Russian reserves. After all, it's free money just sitting in a corner. Might as well just use it, right? At least that's what they are thinking. Obviously, Russia isn't happy about this. Freezing their national reserves is one thing, right? But directly utilizing it without permission is another. Putin is banking on outlasting the West in Ukraine. His plan is basically to get America and Europe to borrow endless amounts of money to finance the fight. And this pushes up bond yields and pushes their economies closer towards a financial crisis, a collapse. At the same time, he is cutting energy production to ramp up inflation to keep interest rates higher for longer. Germany is now in a recession. The EU is about to slide into one as well, and the US is shifting focus to Israel. So Russia's plan in a way seems to be working. But if the Eurozone utilizes Russia's assets, they could keep the fight going at Russia's expense. If Brussels uses the money to buy Euro bonds, not only do they get income to give Ukraine, it actually pushes down bond yields. It keeps borrowing costs low for the West. That's why Russia is now hitting back. In a report by Reuters, Moscow will confiscate EU assets if Brussels steals frozen Russian funds. And this is coming from a top Putin ally who's threatening to unleash a tit-for-tat strategy. He is vowing to inflict more economic pain on the EU if they cross the line. And listen to this. Such a decision would require a symmetrical response from the Russian Federation. In that case, far more assets belonging to unfriendly countries will be confiscated than our frozen funds in Europe. And this is not the first time that Russia has done this. They have seized Western assets before. So this is a credible threat that the West must pay attention to. Back in April, they took control of utility plants owned by Germany and Finland. The Russian assets of Fortum and Uniper were placed under state control. Russia then used those powers in July to seize the assets of Danone and Carlsberg. Those were companies belonging to France and Denmark. It was the second time Putin did that. So if you're the US or their allies, you are a target. According to research from Yale, there are still over 400 multinationals operating in Russia, of which a large number are Western firms. As of July 2023, only 525 firms have withdrawn. There are still over 1,000 firms with assets in Russia. And this includes companies that are still in business and even those suspending operations. Over 500 big brands are still selling stuff to the Russian consumer. They haven't divested from Russia yet, so these companies still have fixed assets and funds floating in the country. If the EU goes ahead with confiscating the Russian reserves, these companies might be at risk. And this is just part of the unintended consequences, right? Yes, if the EU uses Russia's assets, it'll be a short term win. They'll get 3 to 6 billion euros a year for Ukraine. But this will decouple any future of Russia going forward. And of course, this could trigger other central banks to pull their money out of euro denominated assets. Countries like China or even the BRICS members, they'll run away from dollars and euros. And that money will flow into other investments like gold. And you can bet they'll keep it in their vaults back home, right? They won't stash it in the Bank of England or even the Federal Reserve. So Russia's unhappy with the West, but another country is also pissed off, and it is a big player in the Middle East. Saudi Arabia isn't happy about Israel's ground offensive. Israel moving in could destabilize the entire region, which is absolutely horrible for the kingdom. The Saudi Foreign Ministry came out with a statement that denounced the ground operations conducted by Israel. And pay attention to this part, the serious repercussions they will have on regional and international peace and security. And it's important to understand why. Let's peel back the layers to understand Saudi Arabia's economic concerns. Now, the first is the Saudi Israel normalization deal. Saudi Arabia has been working towards that. Now, if that went through, the kingdom might get a nuclear program from the United States. And this is why Saudi Arabia is very angry. With a nuclear deal, the kingdom can slowly move away from oil and gas. They can diversify their economy further. Biden has signaled that the deal is still on the table. After the conflict dies down, after the dust settles, the normalization plan can continue. But this is where things get really sticky. Saudi Arabia is part of the Arab world, and collectively, they aren't too happy with Israel today. If Israel keeps pounding Gaza and moves in further, this puts Saudi Arabia in a very difficult position. MBS can kiss goodbye to his 2030 vision timeline, and it's going to be really tough to re enter the deal, right? The longer the conflict continues, the harder it will be for Saudi Arabia to normalize relations with Israel. Biden might actually be right about the point of the attacks. It could very well be to derail the Israel Saudi tour. However, the ball is with Israel now, and Saudi Arabia is putting pressure on them to stop the fighting. They don't want their nuclear ambitions to be put on hold. But it's going to be hard, and I have a new breaking update for you that just happened a few hours ago. Netanyahu has pledged to keep fighting. He says that Israel will not agree to a ceasefire, so you can expect relations with Saudi Arabia to break down even further. And that's just the nuclear part. A bigger concern is the kingdom's oil industry. And let's not forget that the petroleum industry accounts for over 40% of Saudi Arabia's GDP. That is huge, that is enormous. And if things continue to escalate, which they are, we could see Iran or one of their proxies get involved in the conflict. This could severely disrupt the kingdom's oil exports. Saudi Arabia is located in the heart of the Middle East. Yes, it doesn't share a border with Israel, so direct fighting isn't likely to spread to the kingdom. However, their oil industry is heavily reliant on the Strait of Hormuz, which is under Iranian control. And if this gets closed off, the majority of their oil exports will be disrupted, and that will destroy their economy. If we zoom into their oil and gas infrastructure, we can see why. The majority of their refineries, gas fields, and ports are all situated in the east, just before Hormuz. Even their western refineries are connected via pipeline towards the eastern coast. If the strait gets shut down, Saudi oil is effectively stranded. There is no other viable alternative. And this is another reason why Saudi Arabia is cutting production. They are maintaining the oil cuts because there's not much profit in exporting more. There's just too much risk and uncertainty in the Middle East. But speaking of oil, we need to touch on the recent US-Venezuela oil deal, which is making the headlines. Now, is this a big deal? Yes and no. It won't affect the immediate oil crunch, but it is a move by America to secure more oil for themselves. And by doing this, they'll be taking more oil away from countries like China. As sanctions lift on Venezuelan oil, China's refiners will face stiffer competition. Competition from India and the US will likely raise prices. China will have to pay more for Venezuelan crude. And we know by now China loves to buy oil from sanctioned countries like Iran, Russia, and Venezuela. You get to corner the entire market, and because you're one of the few brave buyers, right, you can dictate the price. you set the price, you enjoy a big discount. For example, China has been enjoying an incredible $20 discount a barrel versus Brent. That's $7 cheaper than even sanctioned Iranian oil. So by removing sanctions, America is increasing competition for crude imports from Venezuela. China has been buying around 300,000 barrels of oil from Venezuela, and that's 40% of the country's entire production, which is a huge amount flowing to Beijing. China is enjoying at least 1 to 2 billion worth of savings every year with this deal. Obviously, America isn't too happy about it. They realize that their sanctions are backfiring as usual. It's restricting oil supply to the global markets at a time when the Middle East is erupting. But more importantly, it is helping China grow their economy at a discount. So this is more of a counter move against China. America is afraid of them building closer relations with Venezuela as well. According to S&P Global, US oil companies are now allowed to begin to explore and advance investments in the country. Of more immediate relevance is US oil refiners will now be able to buy oil directly from PDVSA, that's Venezuela's oil company, and this may lead to less Venezuelan crude going to China. This is likely the real agenda for lifting the sanctions, right? It is to plant their flag on Venezuelan oil fields. And just before you think Venezuela will save the oil markets, you gotta think again. The EIA themselves have admitted that Venezuelan crude output increases are severely limited. We can see a total collapse of the industry from 3 million barrels a day down to maybe 700,000 barrels. This is a direct effect of US sanctions. So trying to ramp this up will take a lot of time, it'll take a lot of money. The infrastructure is in shambles and it is beyond repair in many parts. But it goes beyond that. The issue here is Venezuelan crude itself. It is thick, it is viscous, which means it is very hard to use. Only American and Chinese refineries have the capability to process them. And to ramp up production, you need to spend a ton of money. But investors might not want to come in, right? The sanctions were just lifted for 6 months, and the US can always reimpose them again. So we won't see a big ramp up from 700k back to 3 million barrels. It will be a miracle if we can get back to around a million barrels a day by 2025. But I won't be surprised if these excess barrels flow to the US. I think that is the main agenda, and that will push China and other countries to be more reliant on the Middle East, a region that is now in chaos. So it's important to realize that this economic war is evolving. Almost anything can be weaponized today. It's not just the US dollar or the frozen reserves, but commodities such as oil as well. So America and Europe are starting to strike back because they are being stretched really thin. They are fighting Russia, they are supporting the Middle East, all while trying to counter China at the same time, right? That is insane. The US realizes that they are losing influence in the Middle East, and if that really collapses, they'll lose control of the oil markets as well. So it's not a surprise that they are lifting sanctions on Venezuela. It has always been about oil. Even if we go renewable tomorrow, it will always be about energy dominance. And let's not forget that winter is coming and Russia could always shut off LNG to Europe as well. Russia still supplies 10% of Europe's LNG, and supplies from the Middle East could get disrupted if things get out of control. So if Europe confiscates Russia's assets, Putin might just weaponize energy again. Sure, the US could supply more gas to Europe, but global energy prices will spike to the moon. So we have to prepare and hang on, right? More chaos is coming and it has now gone global. But let me know what you think in the comments below. Will the EU really use the frozen reserves? And how will Russia retaliate? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.